Welcome back. Hope you're having a good morning. For starters, the Gift Nifty suggests we're going to be starting near the resistance zone of around 19,600 odds. So let's see how things move from there. That's on the equity markets. But for the time being, let's run you through the commodity action overnight. Manisha Gupta joins us to help us out with exactly that. Morning, Manisha.
Morning, and thank you for that, Nigel. Well, yes, we did see the crude oil prices gain up by 4% overnight, and we seem to be holding there. The markets are waiting for further developments. In last 24 hours, we haven't seen any impact on the crude oil production, and is the reason you are looking at flat prices at this point in time. Apart from crude oil, we've seen gold, copper, all of that also surged yesterday to nearly 1 week highs, while several other commodities, including natural gas, sugar, wheat, are also trading at multi-week and multi-year highs right now. But the street still wants to see on whether there is going to be a further escalation in geopolitical tensions. There are reports of Iran involved in planning attacks. So all of that, and we have seen various statements coming from countries as well. So at this point in time, it still is a knee-jerk reaction. This is still sentiment into the prices. We haven't seen on-ground impact on any of the commodities. Is the reason you've started this day on a more flattish note. Also, China did some buying yesterday after the return from a week-long holidays. Yesterday, the U.S. markets were shut because of Columbus Day. So that U.S. participation and movement might be seen during the evening today. The day is expected to be on a consolidation side.
All right, thanks, Manisha, for that. Azlin, Ahmad, editor at Crude Oil India, is joining us, to give us more details on what she expects. She's the editor at Argus Media, Azlin, thanks a lot for joining in. I wanted to check with you on what your view is from here on, because there is, of course, this potential supply disruption that everyone is talking about as the conflict escalates further, right? What do you think the impact of that would be on crude oil prices?
Yeah, right now, as you can see, the market went up yesterday, immediately after the events, right? And we've stabilized. I think now the market is on a wait-and-see stance. The immediate concern, I think, is whether there would be any repercussions on Iran should the U.S. feels that Iran was involved and take any measures, like, for example, enforcing the sanctions on Iran, because we know that Iran production has been increasing, exports have risen. Should there be sort of real enforcement on Iran, that could potentially either stop or reduce the crude oil exports from Iran. And that is coming at a time when the market supplies are actually pretty tight because of cuts by Saudi Arabia and a price cap on Russia. So I think at this point, the market is just watching to see if that happens. Now, further out is just to see what happens after this, whether it escalates or not. And I think that would be quite risky. That would be quite dangerous if the violence escalates or more countries get involved. But I think at this point, the market is just watching to see what happens next, and in particular, whether there's any repercussions on Iran, particularly from the US.
So this is the very near-term observation, right? That things could go either way, and it's kind of like a binary event because you don't know whether that de-escalation would happen or not. But in the slightly longer term, do you believe that oil demand is going up? I'm asking you because the OPEC also put out a report where they have raised their long-term demand outlook on oil. What is your longer-term forecast on both oil demand as well as crude oil prices?
Well, I think that at this point, it's to predict where the oil prices are going to go in the longer term would be very difficult, right? We really don't know what's going to happen next week, next month. What I can say is that I think in terms of demand, China's demand so far, I think this year, after the return of China from COVID, has been a little bit disappointing. So it's been a bit lower than a lot of people expect. And there are still concerns about the property sector in China that is having a dampening impact on diesel demand on China. Going forward, I think the market expects that, there would be some strengthening in demand in China, but you're still trying to figure out, potential inflation in US, recession in Europe. So I think that our expectations is that demand will increase, assuming that the market goes back to normal. We do think that supplies next year from OPEC could also increase because higher prices means more producers would want to produce more. And that could keep a lid on prices. But I'm assuming that everything goes back to normal within a very short time.
Okay, and that's based on sort of historical evidence, or what's Azlin? What's that coming off? I mean, we're all hoping, well, it all sort of de-escalates quickly, but
yes.
Yeah.
Well, I think that right now, I mean, I think the thing is that the assumption, I'm not sure. I honestly have no idea how things are going to develop. I think the assumption is that nobody possibly wants a war in the Middle East. But again, I really don't know what other countries are going to get involved, what US, So, but the thing is, if you just look at prices and you look at supply and demand, higher prices, as I said, if things do not escalate and it is just contained within, Israel-Palestine, and it doesn't go beyond that, I think the expectations is that there will be a cap on prices even into 2024 because supplies technically should increase.
Yeah. In 2021, Azlin, when that last, I think there was an 11-day conflict, was a pretty intense period, oil prices rose 19% in that short 11, 12-day period. That was the last Gaza war.
Yes.
And then Egypt stepped in and brokered peace. So that was a very large move in a very short time span. I mean, are conditions very different as compared to then? I mean, some of the other underlying conditions for oil?
Well, I think that the one thing right now is that I think demand is not surging. I mean, if you look at overall demand, and I'm thinking more like China, it's not surging. We're not in a surging demand. Also, I think if you look at the demand supply, the reason why we are in a tight supply situation is because Saudi Arabia has voluntarily cut about 1 million barrels per day for the last couple of months. So assuming, if there is an actual shortage in supply right now, given the current fundamentals, what I'm saying is that Saudi Arabia could put back more crude into the market. So I'm really not ruling out anything. I think that the prices can go up, the prices can go down, because I think that at this point, it would be, I think it'd be very, very risky for anyone to say, we're going to go up to this amount or we're going to go steady. I think nobody can predict that. But if you just look at the demand supply, what I'm saying is that there is a little bit of buffer because the current supply situation, the tightness in supply, is because of voluntary cuts by Saudi Arabia and because of what's happening, sanctions on Russia and the US saying that they want to enforce the price cap. So that actually has curbed the supplies that are coming into the market. So, you know what I mean? Yeah, but I would not be able to predict how much more prices could go up. I think it's anybody's guess at this point.
Okay. All right, Azlin, thanks so much for stopping by and filling us in with your views on the crude market. And we look forward to having a chat with you as this entire situation does evolve.